Part 1. The Hook. November 14th. The trading floor of Vanguard Alpha. Management was dead silent. A $4 billion hedge fund was losing $50 million every 60 seconds. The culprit wasn't a market crash or an algorithmic glitch. It was an encrypted spreadsheet leaked to a ruthless rival. The man behind the leak? A 26-year-old junior analyst named Julian Vance. This is the story of the ultimate Wall Street betrayal. One employee used his boss's secret loophole to engineer a historic short squeeze, forcing a billionaire into liquidation and walking away with the fortune. Part 2. The money. To understand the betrayal, you have to understand the money. Vanguard Alpha was run by Marcus Sterling, a legendary short seller who made billions, pushing failing companies into bankruptcy. Sterling borrowed shares he didn't own, sold them, and bought them back cheaper after the price collapsed. Julian Vance was a math prodigy fresh out of Wharton. For 3 years, Julian was Sterling's ghostwriter, uncovering targets and generating hundreds of millions in profit. But on Wall Street, loyalty is a luxury. While Julian worked 90-hour weeks for a basic corporate salary, Sterling bought his third super yacht. Part 3. The Flaw. In May, Julian discovered a terrifying flaw in Vanguard Alpha's core algorithm. To maximize profits on their latest target, a tech company called Omnicorp, Sterling had over-leveraged. He shorted 140% of the available shares through dark pool networks. This naked short position had fatal vulnerability. If a rival discovered it, they could buy up the remaining stock, drive the price up, and trap Sterling in a catastrophic short squeeze. Julian took the data directly to Sterling, expecting a partnership. Instead, Sterling laughed, told him to stay in his lane, and denied him his yearly bonus. Part 4. The Trap. Julian didn't argue. He copied the trading ledger onto an untraceable flash drive and walked out. That night, he met with Apex Capital, a rival hedge fund, run by a billionaire who hated Sterling. Julian laid out the math. If Apex quietly bought Omnicorp's remaining float, they could lock Sterling in a vice grip. The deal was struck. Julian provided real-time trading updates. In exchange, Apex set up a Cayman Islands account for Julian, funded with a 10% cut of the profits. Part 5. The Collapse. Monday morning, Apex struck. Their massive buying spree sent Omnicorp surging 300%. At Vanguard Alpha, alarms screamed. Because Sterling shorted more shares than existed, he couldn't cover his losses. By Wednesday, brokers issued a margin call, forcing Sterling to liquidate his entire portfolio. Vanguard Alpha was wiped out overnight. Sterling was ruined, his empire erased by the analysts he dismissed. Julian Vance vanished, his offshore account flush with $40 million. On Wall Street, they say pigs get fat, hogs get slaughtered, but it's the Judas you never see coming.